and timely. The bank also facilitates payments between people as they transact through various commercial banks. The bank ensures a stable supply of good quality banknotes and coins within the country. The Bank of Namibia makes sure that prices of goods and services in the economy do not increase.
Governor Gavachab, Deputy Governor Wanguta, Deputy Governor Dan, Monetary Policy Committee members, management and staff of the Bank of Namibia, members of the media, distinguished invited guests, ladies and gentlemen, good morning. Good morning and welcome to the Monetary Policy Announcement for August 2025. We are delighted to welcome our media practitioners and wish to thank you for honoring our invitation to join us today. We also wish to extend a warm welcome to our online viewers and those tuning into the broadcast coming to you live from the Bank of Namibia auditorium. Over the past 2 days, the Monetary Policy Committee, chaired by the Governor of the Bank of Namibia, met to deliberate on the country's monetary policy stance for the next 2 months. A decision was reached yesterday. You will now hear directly from the committee's chairperson, the Governor of the Bank of Namibia, who will speak to you about this decision and outline the key considerations that informed it. Thereafter, we will welcome questions from the media practitioners in the room. Those will be the proceedings for the morning. Once again, welcome. My name is Naufiko Hamunime, and I work for the bank's Strategic Communications Department. With those introductions out of the way, it is my pleasure to invite the Governor of the Bank of Namibia, Mr. Johannes Gavachab, to deliver the monetary policy announcement. Governor, the floor is yours.
Good morning and welcome to the MPC announcement. Thank you, Naufiko. To continue safeguarding the peg between the Namibia dollar and the South African rand, while supporting the domestic economy, the MPC unanimously decided to keep the repo rate unchanged at 6.75%. This policy stance was informed after a thorough review of current and projected domestic, regional, and global economic developments. Let us consider domestic economic developments that inform this decision. The domestic economy maintained positive momentum during the first 6 months of 2025. Domestic inflation has remained subdued since the previous MPC meeting, while growth and private sector credit extension improved further. The merchandise trade deficit has continued to narrow, while the stock of international reserves has remained sufficient to maintain the currency peg and meet the country's international financial obligations. Domestic economic activity expanded during the first half of 2025, albeit at a slower pace compared to the corresponding period in 2024. The expansion primarily reflected improved economic activity in the mining, tourism, wholesale and retail trade, transport and communication sectors, as well as the crop farming and electricity subsectors. Meanwhile, activity in the diamond mining subsector remained weak. Looking ahead, real gross domestic product growth is projected at 3.5% for 2025 and 3.9% for 2026, relative to 3.7% in 2024. This forecast represents downward revisions of 0.3 percentage point for 2025 and 0.1 percentage point for 2026 compared to the April 2025 forecast. The revision to the 2025 growth is largely ascribed to a contraction in primary industries, particularly the livestock subsector, on account of restocking activity. Risks to the domestic outlook remain tilted to the downside, primarily reflecting the impact of global trade policy shifts, depressed international diamond prices, and geopolitical tensions. Domestically, water supply interruptions, especially in coastal towns, could likely weigh on growth prospects. Annual inflation eased to 3.6% on average during the first 7 months of 2025, relative to 4.8% during the same period in 2024. The deceleration is primarily attributed to lower inflation in the categories of housing and alcoholic beverages, augmented by the deflation in the transport category. Since the last MPC meeting, however, inflation stood at 3.5% in July 2025, unchanged compared to the May 2025 print, although it ticked higher to 3.7% in June. For 2025 and 2026, inflation is forecast to average 3.8% and 4.2% respectively. This forecast is 0.1 percentage point below previous projections for both 25 and 26, reflecting lower crude oil price assumption. The annual growth in private sector credit extension shows positive signs of recovery, rising to 5.7% in June 2025, compared to 4.5% in April 2025. The signs of recovery are also confirmed by the private sector credit extension growth, which rose to 4.6% on average during the first half of 2025 from 2% during the same period in 2024. This recovery was primarily due to the higher uptake of credit by businesses, especially in the categories other loans, advances, and overdraft, as well as installment sale and leasing credit. Turning to the external sector, Namibia's merchandise trade deficit has narrowed by 28.2% to 12.8 billion Namibian dollars during the first 6 months of 2025, compared to the same period in 2024. The narrower trade deficit was due to a substantial rise in export earnings, predominantly from uranium and gold, compared to the moderate increase in import payments. The stock of international reserves remains adequate, rising to 58.1 billion Namibian dollars at the end of July 2025 from 57.4 billion Namibian dollars at the end of May 2025, aided by SACU receipts. This level of foreign reserves translates to an estimated import cover of 3.8 months, which is considered adequate to sustain the currency peg between the Namibia dollar and the South African rand and meet the country's international financial obligations. Let's consider developments globally. The global economy continues to exhibit resilience, with the medium-term outlook revised upward. Since the previous MPC meeting, global inflation has generally remained contained. Key global stock markets gained, while bond markets varied. Monetary policy stances eased across several of the monitored central banks. Global growth has been treading water since the previous MPC meeting, according to the available second quarter GDP data. Year-on-year growth was unchanged in the US, while it slowed in the euro area and China. Looking ahead, the International Monetary Fund, in its July 2025 World Economic Outlook update, has projected growth at 3% for 2025 and 3.1% for 2026, compared to 3.3% in 2024. This is a lesser deterioration in growth compared to the previous World Economic Outlook forecast that was released in April 2025. Developments in key commodity prices were mixed since the last MPC meeting. The price of gold fluctuated somewhat, but has softened below the level observed at the previous MPC meeting. Crude oil prices declined since the last MPC meeting, consistent with the increase in oil production, thereby assisting in the containment of inflationary pressures. Turning to base metals, zinc futures prices continued to rise, largely supported by a decline in global inventory levels. Copper prices rallied in late July 2025, but then declined notably following the United States exemption of new tariffs on refined copper. Despite falling from the June 2025 highs, uranium spot prices have remained firm, aided by underlying demand for carbon-neutral baseload electricity supply. Diamond prices remain subdued, mainly due to a weaker global demand and partly due to competition from lab-grown diamonds. Key global markets generally gained since the last MPC meeting, fluctuating higher despite the imposition of new tariffs by the United States. Bond yields have shown divergent patterns across the monitored economies, with yields on balance edging higher in Germany, Japan, and China, but receding somewhat in the United States and falling notably in South Africa as policy actions and pronouncements by the central bank resulted in lower inflation expectations. Inflation in key economies has adjusted upwards since the June 2025 MPC meeting. Among the monitored advanced economies, inflation rose in the United States, the United Kingdom, and the euro area, but eased in Japan. Additionally, inflation edged higher in most of the key emerging markets and developing economies, except in China, where consumer prices stabilize. Looking ahead, the IMF expects global inflation to recede from 5.7% in 2024 to 4.2% in 2025 and 3.6% in 2026, broadly unchanged relative to the April 2025 World Economic Outlook. With regards to policy rates, most of the monitored central banks held rates steady since the June 2025 MPC meeting. In the key advanced economies, the policy rates of the US Federal Reserve, the European Central Bank, and the Bank of Japan remain unchanged, while the Bank of England reduced its policy rate. Meanwhile, trends in policy rates in the monitored emerging markets and developing economies varied, with the central banks of China and India holding rates steady, while those of South Africa and Russia reduced rates. Conversely, the Bank of Brazil further tightened its policy rate. Against this background, the monetary policy unanimously decided to maintain the repo rate unchanged at 6.75%. Commercial banks are accordingly expected to keep their prime lending rates at 10.5%. This policy stance will continue to safeguard the one-to-one link between the Namibia dollar and the South African rand while supporting domestic economic activity. In accordance with the guidance note issued by the Bank of Namibia in June, commercial banks are expected to reduce their prime lending rates by 12.5 basis points to 10.375% by the end of September 2025. The normalization in the prime repo spread that is in the pipeline is expected to provide support for domestic economic activity and credit growth going forward. Maintaining the repo rate unchanged while the anchor country's repo rate was reduced in July was a further step towards narrowing the interest rate differential between Namibia and South Africa. The MPC is pleased to know that while the gap has been closing, the repo rate in Namibia would remain 25 basis points lower than in the anchor country, which is good for supporting the domestic growth, without jeopardizing the stability of capital flows that has been observed to date. The MPC further acknowledged the South African Reserve Bank's recent announcement of a reduction in its preferred inflation rate of 3% from 4.5%. The committee welcomes and recognizes the positive policy development associated with this stance to promote price stability and strengthen monetary policy transmission. Thank you for listening.
Thank you very much, Governor. We will now open the floor for questions from the media. If you have a question, we have 2 microphones on either side of the room. Please make your way to the podiums. Remember to introduce yourself and also state the organization that you represent before you ask your question. Are there any questions in the room?
Good morning, Ukwane from Market Watch, Namibian Sun. Two or three questions. Firstly, the issue of South Africa or the South African Reserve Bank realigning its monetary policy framework down to 3%. In terms of internal workings here at the bank, is any work being done to follow suit in that regard, or are you first going to see how it's going to unfold in South Africa? And then the second issue, somewhat of a contentious issue where you are advisor to government on the finance side. And we had recent pronouncements made of an equity freeholding, or we don't know whether it's freeholding or whether government or whether there's going to be an equity involvement where the Minister of Mines spoke towards 51% shareholding. As the Bank of Namibia, what do you make of these pronouncements? Are you concerned, and do you think that it could affect investment decisions, particularly in the oil and gas space? Thank you very much.
Thank you very much. Are there any other questions? Josephina?
Good morning, Governor. These are online questions asked by the media. There are about 4. The first one is, Angola's economy is going through some turbulence. What impact will this have on northern Namibia? Second question, the regulatory framework for bank charges, has this been put in place? Third question, with the unveiling of the new Namibian banknotes and coins, many members of the public have expressed curiosity about the cultural, historical, and symbolic choices made in these designs. Could the Bank of Namibia explain how these design elements were chosen? What measures were taken to reflect Namibia's diverse identities? Whether there are plans to broader public engagement in future currency projects? The last question, can you please give an update of what the progress has been on plans to raise 122 million in the domestic market to refinance a portion of 550 million euro bond due in October? Thank you.
Thank you, Josephina. So I think, Governor, we can take those 6 questions. Thank you.
Thank you for the questions, quite good questions. The Angola's impact, developments in the Angolan economy and the impact thereof, I'll ask DG Wanguta to deal with. The regulatory changes on fees and charges, I'll ask MPC member, did you done to deal with? Market Watch questions on realigning its policy, whether any work has been done. We have done substantive work, and I hope you come tomorrow. So we'll do a full presentation for you tomorrow on the impact thereof. 51% shareholding, oil and gas. I think we need to ask the Minister of Finance and the Minister of Mines and Energy. That's not a monetary policy issue at this stage. Eurobond, I'll ask MPC member Nicholas Mukasa to deal with. So let's start with the responses from MPC members. You are hearing from me every day, so you'd like to hear from my colleagues on the MPC as well.
Thank you very much, Governor. I think with respect to the question on the impact of the Angolan economy on the northern part of Namibia, we know very well that Angola has really been a key trading partner for Namibia, and we need to recognize that particularly about 5 years ago, there has really been quite a huge inflow of funds from Angola, traders crossing the border, getting into northern Namibia, and Oshikango by that time was booming. I think given the slowdown that we have seen in the Angolan economy, certainly that impact was already felt, I think a couple of 3, 4, 5 years back. This is not really a new development. To that impact already, we have seen it. It has already filtered through. So it's not really something new. So it's something that we are well aware of in terms of that impact. I think that's possibly all what I could say with respect to that. I think on the issue of redemption, I think my colleague Nick will touch on that.
Yeah. Thank you for the question. As far as the Eurobond redemption is concerned, all I can say is that we are on target to redeem that bond when it matures in October. We've got a very detailed sovereign debt management strategy that we are following. As we have been mentioning at this platform, we've got a sinking fund that we've put together and have accumulated some savings that will go towards redeeming this bond. And then also as part of this year's borrowing plan, you've seen that there's a pickup in the domestic issuances. Part of that was to make way to raise the funding to be able to redeem that bond. So as far as that borrowing plan is concerned, it's performing well. There are no funding shortfalls. We have seen very good interest in all of our bonds, so both long-term and short-term bonds. So we are basically on target. Thank you.
Did you done?
Thank you very much for the question on where are we with the development of the regulatory framework on banking fees and charges. Allow me to start with guiding that the statutory mandate to issue regulations on bank fees and charges, that mandate vests with the Ministry of Finance. What we can guide you today is we know that the regulatory framework has been finalized, has been consulted upon with all relevant stakeholders, including the banking industry, and we remain hopeful that before the end of 2025, the framework may be operationalized, but it depends on final confirmation from the Ministry of Finance. Thank you.
Right, that takes us to the design question of the currency. So before I play a video clip for you, let me try and explain the process. So many people do not know that there is a process that guides how we design our currency. We try to be as inclusive, representative of our economy, our culture, and our country when we design. Those designs come to the Executive Committee of the Bank of Namibia. They debate it. If they agree that, they take it to the board of the Bank of Namibia. After the board of Namibia approve that, they take it to the Minister of Finance, consult the Minister of Finance. Thereafter, it's being taken to Cabinet. Cabinet debates this, and it's been taken to the Presidency. That's input being provided. And only after that process has been finalized do we really go and finalize the designs that you see on our coins and our banknotes. We have launched the new upgraded banknotes and the new coinage series on the 23rd of July. Let us show you what we said, what those designs stand for, so that we have got clarity around that. Can someone play me that video clip? It's just 2 minutes, 3 minutes.
Namibia is a nation built on resilience, shaped by heritage and driven by a vision for inclusive growth. Our currency is more than a tool of trade. It symbolizes our sovereignty, values, and national pride. For the first time in 3 decades, Namibia's second generation of coinage has been reimagined to enhance security and functionality and to tell a richer story of who we are and what drives our economy. The coinage has been engineered with advanced security features to protect the integrity of our currency. Micro-lettering, ultra-fine inscriptions that are invisible to the naked eye, but impossible to replicate without advanced technology. Latent images, visual elements reveal new details when viewed from different angles. Edge variations, reeded, plain, and patterned edges help visually impaired users distinguish coins by touch. Bimetal composition, 2 metal high denominations improve durability and deter counterfeiting. The coins have been resized for efficiency, smaller, lighter, and aligned with international standards, reducing production costs while preserving functionality. The new coin series introduces a new 20-cent coin, making transactions smoother and more efficient. The new coins have been designed with sustainability in mind. Reduced size and weight and optimized metal composition significantly reduce environmental impact, demonstrating Namibia's commitment to sustainability. Less material, less energy, and less waste. Each coin honors a key economic sector, honoring the industries that power our economy and shape our national identity. Mining. Mining is the cornerstone of our exports and a driver of national revenue. Retail. Retail breathes life into our communities, creating jobs, enabling trade, and connecting people to opportunity. Tourism. Tourism showcases our national beauty and cultural richness to the world. Renewable energy. Renewable energy paves the way to a sustainable future, driving industrialization and building resilience. Agriculture. Agriculture feeds our nation and sustains rural livelihoods. This is a coinage series that works harder, lasts longer, and tells a deeper story. It is secure, sustainable, inclusive, and proudly Namibian.
Right, so that is what we have explained when we launched the new banknotes and the new coinage series. To summarize, the 10-cent coin is basically depicting the agricultural sector, which is quite important for our country. The 20-cent coin, renewable energy, and in that space you see solar energy, you see green hydrogen, all renewable, biodiversity, biomass, that talks to that. 50-cent coin talks to the tourism industry in the country. That $1 coin talks to retail, and the $5 is manufacturing. On the 24th of July, day after that, we issued branding and marketing material. So if you don't have that, this is what we have issued. And clearly in that we explained on the $1, for instance, the 2 hands exchanging coins is actually retail in transition. The motif symbolizes the fundamental essence of retail, the act of buying and selling. So it goes on. So that's the official position of the Bank of Namibia. Unfortunately, social media feeds start attributing their own descriptions and explanations of our designs and the motives. And we had no control over that. And the unfortunate part is that people call it names that's not easy to be repeated. It's actually not preferable or ideal to even repeat those. So the Bank of Namibia referred to some of those names, and that apparently has offended some people. So on behalf of the Bank of Namibia, and someone who is speaking the Kwekwe language, it's so incomprehensible that I could associate my own language with the negative narrative that's given to this coin. I cannot disown myself. That's who I am. And it's not good if people start saying things that's totally not right. It did not originate from the Bank of Namibia. It originated in the social media feeds. So on behalf of the bank, I can only offer apologies if the names that's been ascribed through social media to some of our coins have offended, insulted some people. That's not our making, but I think we are mature enough that it doesn't harm to say apologies to Namibians who have been offended, but whatever names, that's not only one name given to those coins, there are many others. So our apologies as far as those coins are concerned. To come back to your question, we've really tried to be as inclusive and representative as far as possible with that. Let's take further questions and comments.
Thank you. Are there any other further questions? Okay, it doesn't appear to be so. Thank you very much, Governor, for that extensive reflection and explanation. Thank you, MPC members. Can we please give them a round of applause?
Yeah.
With that, we've now come to the end of our proceedings for the morning. However, tomorrow, as the Governor alluded to, the bank will be hosting its annual monetary policy dialogue with key stakeholders, where we will deep dive into key economic and emerging issues that are shaping our economic and also policy landscape, such as the implications of South Africa's inflation target review, the potential impact of tariffs on Namibia, and the Bank of Namibia's reserves management strategy, and much, much more. Make sure to tune onto our Facebook page in order to follow tomorrow's proceedings. However, for now, it's goodbye. From all of us at the Bank of Namibia, thank you for joining us today. Let's continue the conversation outside. Until next time, thank you and goodbye.